So let's take a look at the recent inflation data and what impact this is actually going to have on the economy, investing, decisions to be able to make, and things moving forward.
Economic data.
Yeah, in December, inflation rose by 0.3% month over month and 2.7% year on year.
NBC News business and data correspondent Brian Chung joins us now to get us a deeper dive into these numbers. So break it down for us and how they compare with previous months. What is this just telling us about the health of our economy?
Yeah, and again, these numbers just coming in, but they're basically right in line with what our economists had expected on a yearly basis. Again, let's talk about that 2.7% figure that you just brought up. That is the pace of price increases between December of this year and December of last year. And you'll notice that if we compare that to the November to November period, which we of course got last month, it was also 2.7%. So that means, yes, inflation is basically keeping pace right now, but still a lot of work to be done when you consider.
So if you take a look at that, inflation is essentially more closer to levels seen before, like the big post-pandemic spikes, right? Which was like the 2.7% versus the 9% in 2022. So price growth more or less is modest, but by historical standards. But still, the Federal Reserve have a long-term target, and their long-term target is 2%. So we're still away from that 2% target. So there's still some levels to get down to.
That really where we want to be closer to is 2%. That is the Federal Reserve's target on inflation. So again, we've kind of been hovering around that 2.7% figure. Again, that's where we are in December of 2025. You'll notice there's a little bit of a gap here, and that is because we did not get October numbers due to the government shutdown. So again, all things we're watching for as we do continue to watch inflation as affordability remains an issue in America.
Let's go category by category, Brian. What are we seeing as prices change?
Yeah, so if we break out these categories, and you'll notice that usually we are talking about monthly changes. We're going to talk about yearly changes here because, again, we don't have October to November comparisons because of the government shutdown. So we're looking at November to November period, and now for these categories, December to December period. I want to talk about food in a second. Energy prices did go down. That was because oil prices went down as well. If you talk about a yearly pace, it was only 2.3% compared to over 4% in the last measure. Shelter costs, the biggest cost for most Americans, just putting a roof over your head, actually accelerating a little bit to 3.2% on a yearly basis. But food, the reason why we pay attention to this is
you can see with shelter costs, they actually made quite a notable contribution to inflation, right? Energy, as you can clearly see with the energy levels, it's 2.6%. 4.2% November, 2.3%, right? So you can see that change has come down slightly.
Because between November and December, the Trump administration, as you recall, put a number of exemptions of tariffs on food items to address affordability. But we saw food price inflation accelerate in this month, at least as measured by this report, 3.1%. It was sub 3% in the November period. That's something we're watching as well.
And of course, people are watching what they pay at the grocery store, too, all the time. We know there's still a gap in last year's data from the government shutdown back in October and November. How reliable is this data we're getting now?
Yeah, well, again, when we talk about reliability, those reports that we even got in part prior to this were the best that we could possibly get because, again, the Bureau of Labor Statistics is the most comprehensive that we get. But we still have that hole in the data here. So you can notice that, again, it's going to look kind of nasty for at least the next a year or so when we plot all this out because there's just going to be a hole right here. In October, the government was not...
I think we all need to understand, we understand the levels that's coming out and the situation in terms of the price points, but we need to understand what impact this is having, yes? So in terms of like interest rates and monetary policy, inflation basically slowing may give, because it's at 2.7%, target rate is 2%. So the slowdown may give the Federal Reserve more room to hold or potentially cut interest rates in 2026, right? So as prices aren't accelerating. But Fed officials more or less describe the moderation as encouraging, but remain cautious because job markets and price expectations still matter. Unemployment rate has ticked slightly higher, so this is something we need to also be aware of. In terms of like real purchasing power, even a 2.7% inflation rate can feel high for everyday cost if wages aren't rising at the same pace. And we generally see it. Wages are not rising at the same pace. So clearly, even at 2%, 2.7%, that's still quite high. But in terms of like market expectations, financial markets are more or less taking these inflation readings as a sign that the runaway price increases are less likely, right? And this is supporting stocks. That's why stocks are at all-time highs. S&P 500, FTSE, Most of the major indexes globally are at all-time highs, but specific to the US, you can clearly see 2.7% is accommodative for the market to continue to accelerate higher. But for ongoing concerns is always the 2% goal, meaning prices are growing faster than a central bank wants, though moderately. So essentially, food, housing continue to rise for many households, impacting real budgets. So this is something to take a look at. If you like this type of information that I break down inflation, all of these various price metrics, please like, subscribe, follow, come back to another one. Bye-bye.